Very welcome to the official, my official Google/Alphabet earnings live, guys. Okay, and maybe the one or the other saw I just moved the time like 10 minutes before the market close, because there's one thing which is very important to myself, and I also think for you guys. As you know, yesterday I claimed that I'm going short Google into the earnings, okay? And I established a short. And maybe you know that the Google stock went down yesterday and also today massively, like 2-3% in total maybe. And my position made already 20%, which you can see here which product I actually bought, and this product made already 23%, and I decided I will not take the risk actually and lose this 20% by going into the numbers, because guys, I just seeing numbers every single day and I don't know why these companies react how they react. It's totally crazy how stock market values companies right now and how it goes and react pre-market, after market. It's totally insane, guys. And therefore I thought, like, either, and this is the risk management that I try to teach on this channel, and also which is very, very important when investing. You have a 100% chance if you go out of this trade with 20% plus, or you have a much higher, you have zero risk if you go out now with 20% and take this 20%, or you stay inside the earnings and you trying to get to even more or less, but the possibility of getting struggled into this trade is more than 0%, because it can happen somehow that it goes into the right direction, the wrong direction, and therefore why taking this risk. 20% is great return of investment since yesterday. So I went out just to let you know this is very important. So very welcome. And I thought, besides asking from where you're watching and how you're watching, let's have a question of the day, which is today: what is your favorite stock? Let me know in the comments, guys. I'm very happy to see obviously where you guys are watching from, and I will have a look right now, guys. The market is pretty, let's say, plus minus zero. It's nothing like good or bad. So we have Seattle. We have, by our member Q YouTube, he was one of our first member. And let's talk about members. This is important, guys. We have a brand new member, guys. Let me have a look where I stored the graphic. Okay, apparently I didn't store the graphic. So let me just fix that real quick. In terms of, let me have a look. So a little bit of technical adjustments. You should see nothing at this point. This is totally normal. My voice will guide you through this without any problems. So you should see now, see how much attention this new member get. Katie Wood is our new Ultimate Wolf Diamond member. Thank you very much and welcome to the community. You might know, I just introduced memberships recently, and you can have a brand new membership. One of those threes here. Just check out the join button below my videos, below my live streams, and if you are interested, just join the community. So let's have a look. So yeah, I sold this product 23%. This was like a option short on Google, because as I yesterday explained, it's very likely that Google is very heavily dependent, or we know that they are very heavily dependent on the ad business, and the ad business will have a huge impact, negative impact, due to the whole situation. So I think this was a great deal. As you can see, I have researched a couple of things that I showed yesterday in the stream. I looked what is the risk and what is the tolerance that I personally can put into this, and I thought the risk is the money that I put in this trade, obviously, but also on the other side, the reward, or the probability is actually not that bad, that Google either to the numbers or at the numbers will maybe infect the market to go down after earnings. But we are just 4 minutes away until the market close, and then we will know more. Hopefully, it depends when the Google decide to publish the numbers. Can be 10 minutes after the market closed, can be in 20 minutes. However, we stay live until we have those numbers. This is what I'm promising you. So let's have a look to our comment section. So we have Germany, we have South Africa, we have Zurich, we have London, Florida, and Vienna. We have also Atlanta. We have let me have a see. We have, let me see, nobody else is showing. London again, and we have Italy. So and we have Lisboa as well. I think Hugo is from Lisboa. Okay, so pretty much international today as well. So I'm very curious how the stream moves on. So let's have a look at things, a couple of things that I want to talk until we have those earnings. So here's a current graphic that I think it's very important. I saw this on one of my colleagues here at YouTube, and I think this is showing something very important. So this is the overall sentiment of the current earnings season. Now you see, if this graph is going down, this means that analysts or investment banks are actually revising their earnings down. So they think that earnings will be down. And obviously, if you are now seeing all of those great earnings that are happening right now, lots and lots of earnings happened already, like 3M, Ford, Caterpillar, Merck was today as well, and you see those earnings. Omnicom, one of the biggest advertising agency or company in the world, and all of them beated the earnings, which means that they actually have or were much better than expected. And this is because if you reduce their earnings expectation, then it's easier to meet those expectations. So this is very important, guys. All the expectations are very low, okay? And therefore, I didn't felt so comfy anymore when I saw all these companies showing really, okay numbers, still beating the lower expectation, and be, positive afterwards, while they should maybe lose some steam. But on the other hand, you also have to consider there's one more thing that I saw, that the guidance is very important. So companies that are not giving us the guidance sometimes perform better after the earnings than the companies that are giving guidance, because guidance are obviously very important for investors. But if those guidance are bad, then this is a bad sign for the company. If you don't do the guidance, then how bad it can be, right? This is the logical question that you ask yourself. But it's actually more or less neutral for those investors, as we can see. So for example, Merck, a big pharma company, just did that. They give guidance, and those guidance were absolutely shredded by those investors, which it's crazy, because you just see how it's impossible to give us an outlook on the future. We don't know how long it will. We don't know about the second wave. We don't know how this will affect our daily life. So how people or companies or CEOs can actually give a guidance, I don't know. And if someone knows, then let me know in the comments. Let's have a look. It's now the market close, so I will just have a look here. Meanwhile, on different sites like CNBC or Google, Google investor page. These are those. Let me show you the screen here. So if you just put Google investor, you usually see those Alphabet investor relation pages. Those are usually the first pages where they release the earnings. It's not released yet, as I can see. Alphabet announced first quarter financial result conference call. Okay, that's just an announcement. I don't think this is yet. No, it's not the release, no. So they will actually do the earnings release prior to the conference call. The conference call is usually like a call between the company where they talk about the earnings a little bit. They also say why they did what business decisions are going to be made over the next couple of weeks, months, years, and so on. So very, if you're interested into Google or other companies, make sure to check out those earnings, because I think that's quite interesting. Let me just refresh the page. Nothing yet, I guess. And also CNBC has nothing yet. Okay, so we can have a little bit time here. Back to the screen. Let's have a look. I have a couple of more graphics, which is I know. So this was which we talked about. We talked about my trade as well. We talked about the earnings. This is something that I wanted to go inside real quick before we dive into the earnings of Google. I think that you see that those companies that are very, very capital intensive or machine intensive, like Caterpillar, they will really get hurt, because there's a huge amount of usually companies stopping those investments into new equipment, because they say, maybe we can wait for the next machine that we usually thought to buy this month or quarter or whatsoever. So I think this companies will be very effective in the long term. I'm very curious also about Starbucks. Will be also to see if people are drinking less and less the premium coffee, the $7 latte that makes you poor over time. And then we will have tomorrow, also very interesting, Tesla. I will be live on that, obviously. Facebook will be also interesting, very big advertising play as well. Microsoft. Guys, if you see that Google or Alphabet is giving some numbers and I'm just chatting here or something, just let me know in the comments, please. All right. So let me have a look. I want to go into some of your questions right now. We're having also Holland here. We're having Nepal. Unbelievable. From US until Asia. You are German is a question. Yes, I'm German. Actually, I'm German, living since about 2012 in Dubai. Yeah, very much like it here, but born and raised in Germany, and this is quite fun that you recognize my accent. Okay, so we have apparently Jan is telling us that we having those earnings, right? Let's have a look. Alphabet numbers are here. So let's have a look. Where are those numbers? I think I have to refresh that. Okay, so let me have a look. Sorry, I just checked the live stream. It's looked that I'm not live anymore, but I'm live. So so let's have a look. Is it? What is more important even? Let's have a look how the stock react, and let me have you show you the screen. So apparently I did everything right. So you see that the stock went up 3.36%, right? So everything right, you know, going out of this share of this trade. You know, I said it's so unpredictable to go into the earnings. You know, it's so hard to predict, and the stock went up 3%. Before the market closed, we went down even 3%. I went down when the stock was about 2.5%. So, you know, that's absolutely positive. Let's have a look into those numbers and the shareholder letter. It must be somewhere here. Okay, let's have a look. Press release. Here we go. Alphabet announced first quarter 2020 results. Mountain View, which is approximately maybe one of the best and most beautiful areas I have seen in California. So let's get to the meat. Our business, led by search, YouTube, cloud, drove Alphabet revenues to 41 billion, up 13% versus last year, or 15% on the constant current basis. Now, this is very huge, guys. This is obviously a very important part. Obviously, lots and lots of people went into this and using their product search, YouTube, cloud. Now, just about this sentence, it's so important that what I said yesterday. You remember, I think the most important part will be revenue to watch. Now see how they phrase that, okay? Our business, led by search, YouTube, and cloud, drove Alphabet revenues up, right? So search, YouTube, and cloud, but advertising is not mentioned here that much. Let's have a look what else they saying. All right, so let's head into those numbers. Okay, so operative income, it's also higher. Net income 9.87, a little bit less than the year before. YouTube ads went up. Google advertising went up 10% compared to last year. Other bets went heavily down, as you can see. This is because Google Other Bets, you know, this is hugely like, you know, small projects here and there where you really have the startup feeling. So this is heavily hit here from last year. Also hedging gains, wow, they lost really here heavily, 49 million compared to 140 million last year. Let's have a look how the Google stock is doing right now live. 3.44% up, guys. 3.44% up. Number of employees rose. They actually having 123,000 employees, guys, and they wanted to add 20,000 more, but actually went back and stepped back and said, we are currently making a hire freeze, so you can see here about 20,000 new jobs created from last year same quarter. Operating loss of other bets, as you can see here, the overall scheme looks further, this other bets is really not good. And then we have just those claims. Then let's have a see. Asset went up a bit. Let's have a look. What else is important? Overall assets went a little bit down, as you can see here. I hope that's big enough. Let's make it a little bit bigger. Long-term debt went a little bit up. Liabilities went down. Doesn't mention. Okay, so this is also a very important number. Obviously, the cash always. So the cash went also up about $1 billion. That's positive. Overall revenue went up. Income didn't went that much up proportionally, as you can see. That's quite interesting. So they had to increase their expenses, which you can see here as well, right? And the $9.96 per share earnings. I saw just someone, Jan in our chat just told us that, Alphabet misses $1.12 versus expected and beats on revenue, and is saying experienced a significant slowdown in ad revenues. This is what I just said yesterday. This is the most important thing to watch. Let's have a look if wow, Alphabet stock rises 13%, guys. I don't see the 13% here right now. Oh, okay. I read it wrong. Okay, so Alphabet stock rises, full stop, on 13% revenue growth. Okay, I got it. CNBC. CNBC is a little bit of confusing right here. Okay, here again, summarized in a nutshell. Here's how the company did. Earnings, 8.97 per share. This we saw all in the both revenue and earnings we saw already in the PR release. So cloud revenue 2.78 billion, YouTube advertising 4 billion. So you see that YouTube advertising is already much more important than the cloud business for them. Traffic acquisition cost 7.45 billion. This is, guys, if you want to invest in future into Google or other tech companies, I think this is very, very important. Traffic acquisition cost, okay? This is a number that is important for Google to really get number one search tool. And this is, for example, the cost that they pay to Samsung, that they pay to Apple, to be the main search engine. If you type something on your iPhone, then it's going directly to Google, and they are paying billions. Apparently last quarter, $7.45 billion. And I think also traffic acquisition costs are also maybe some costs that are involved somehow into getting advertisers to boost more into those systems of Google. So I think this is very important number. Make sure to always check those, if those are long-term costs, if those are stable, if those are fixed costs. This is obviously very bad for them. Then we have the revenue growth rate, 13%. We got that. Advertising still makes a big piece of that Google pie, Alphabet pie, with 82%, guys. We had the graphic yesterday, yesterday, that we saw that in the graphic it was still 88%, but 82% of the whole revenue is dependent on advertising. And then you can see how Google is vulnerable in those timings. Unbelievable. One of the biggest companies in the world. Let's have a look. So analysts pulled Factsheet had expected 2.8 billion for the first quarter cloud, and we were at so they expected more for the cloud business. Okay, let's have a look. Then they expected 4.14 billion in revenue for the quarter for, I guess that's for YouTube. So YouTube was also a little bit more, less than expected. Let's have a look. They also announced those revenues, cloud and YouTube, for the very first time. This is also positive for us investors. As more, guys, transparent a company is, as better for the overall investment. Let's have a look where the Alphabet stock is. The Alphabet stock almost plus 4%. Guys, I'm so happy that I went out of this trade. So travel companies like Expedia, I said this yesterday, 11% of all spending is by the travel agencies, airlines, hotels. If you type in Google hotels in Las Vegas, you get a huge amount of ads. All of this is gone, and this is here described as well. Flight to London, hotel in San Francisco, and so on. But Expedia recently said it normally spends 5 billion on ads, but it probably won't spend 1 billion this year. So you see how big this is of an impact for Google. This is unbelievable, guys. This is unbelievable. So Booking could slash Google ad spending on Google from 4 billion to 1 billion as well. So this is crazy. This is absolutely crazy how this clients of Google just slashing their profit just to be afloat. So I think the next quarters will be really challenging, Mrs. and Mr. Google. The Google has begun to put some cost-cutting measures in place. We heard about that as well. They do the freezing of new employees. That's also important. R&D expenses grow. This is not so good because this is very high paid software engineers, as I would assume. So basically 20% of this R&D people. Wow, this is a big cost. I can imagine this is a very big cost for that, I think this is a very huge cost for Google. Let's see if this number will be not reduced, because R&D are those guys who are really well paid. These are engineers that are software developers. It depends on which area they are working. But this is a huge expense. So the stock is up now about 4%, guys. If you were with me, we did everything right. We bought, the Alphabet stock went down. We went out before the earnings. A perfect trade, as I would say. Let's have a look. In the comments, if we have something. So Olga thought I'm Italian, so mamma mia. Yes, let me have a see. The caches isn't bad, that's right. They have really deep pockets. That's indeed. And guys, don't get me wrong. If I'm shorting Google, it's not because I don't like the company. I love the company. I just think that, long term, this company will make flying cars, flying U-boats, flying, I don't know what. But now they have a huge issue, a challenge ahead, that 82% of their business is actually hugely taking a hit, guys. And even those big companies have struggles, and therefore they cut their expenses, their marketing, everything that you can imagine will be affected by those companies. Those companies, I remember when Warren Buffett said something about the lines that when he wanted to invest into Google, he went into the headquarters and it looked everything like a kindergarten because there was everything for free, food, lounge areas, everything was colorful. So Warren Buffett didn't maximize on that at all. Very, very interesting. Better to wait for Q2 or later to enter along Google? I think yes. I think my personal opinion is just they will have really stormy quarters ahead. So let's see about that. There will be definitely some other options if you're looking into the stock. Let's just have a stock. Let's have a look into the stock, how the overall performance is over the last 5 years. So you can see here why my mouse is not where it's supposed to be. Okay, this is strange. But as you can see, we are still a good chunk away from the all-time high here. And I think that, you see here a good resistant line at about, what is it? Let me have a look at $1,000, So you could invest when the stock goes back to $1,000 because you see here, 1, 2, 3. So here's really a big resistance going always back and bounce back. So if you buy at 1,000, it's a good resistance line. It secures you a little bit technically before you go lower. And let's see where the stock is now at 3.38%. So this should remove all the gains that it did intraday today. As you can see, the stock went up straight down and then had the big jump up after the numbers. A market value or cap of 848.80 billion dollars and the PE ratio of 25, which is actually cheap for a software company. It's or mainly software company. It's actually pretty cheap. But one more thing, I wanted to show you one book. If you're interested in those companies like Google, Facebook, Apple, I will show you a book that is very interesting. Let me see if I found it. The Four by Scott Galloway. This is a New York Times bestseller, and this book is about Facebook, about Google, about Amazon, as well as about Apple. And it's really, really nicely explains you why the people are using Facebook, why Google is like everything to us. We can ask Google anytime, anything, and it always answers. Doesn't matter if it's 3 a.m. in the morning or 4 p.m. in the afternoon. Amazon, we can just get anything delivered to our doorstep, and Apple is selling us sexiness. This is a very nice book, so order it. It's really great. Or check the audiobook or check the Blinkist audio. It's a really great book to understand more those four companies. It's really fantastic. So Google stock made it through the earnings, and this is what I said, guys. Even though the outlook doesn't look good at all, the stock goes up heavily. And therefore, it was a quite interesting evening. Thank you very much for watching, guys. Leave a like, please. Subscribe if you're new here, ring the bell, and I see you tomorrow for the next earnings of Tesla.